Good evening, everyone, and glad to be here on this stage with the brilliant minds from the sectors. More importantly, this is the last session of the day. I can see the booths wrapping up. People are whistling, clicking their selfies, and trying to plan for the next SFF 2025. I will try my best to get insights for you specifically in terms of how the insurance and pension will be driven by data and AI. And I'm glad to share with you that I have with me Dr. Sabine Kapasi, the advisory to Global Strategy Team, United Nations. Then I have with me Dr. Amlan Roy. Dr. Amlan is again a great professor, partner LCP Research Associate, LSE, FMG, SRC, author of Demographics of Unravelled, and a best friend. In fact, must say he has been talking a lot about this particular sector. And I have Dr. Jason, Research Assistant Director, Financial MBA Center, Tsinghua University PBC School of Finance. The one common thing between all three of them is they are doctors. And I'm a journalist. My name is Amol Dethe. I'm from Mumbai, India. I cover banking, finance, economics, specifically for the Economic Times, and write on this segment. When I started my career, insurance was the first sector I reported on, and I told the insurance CEO that I don't understand insurance. It's very complicated. And he said, oh, if you find insurance complicated, that means you understand it. So that's how the insurance is. So Amlan, let me come to you directly and start questions specifically on this domain is, in the digital world, how to build data and AI efficiently to scale up insurance?
First of all, thank you very much for the opportunity to be on this panel with distinguished chair and speakers. I know I stand between you and the last drinks. My background is nearly 4 decades in investments and finance. Teaching finance, being in investment banking, being in investment management, and now in investment consulting. So I'm going to talk from a finance background. And day before yesterday, I showed that the UN agrees that we are unlikely to achieve even 65% of the sustainable development goals because we do not have good data. We do not have accurate data, we don't have consistent data, we don't have comparable data. And that's on the first 5 sustainable development goals, which have to do with hunger, water, education, health, and gender equality. So if on the first 5 also we can't measure things properly, and here I speak like a finance derivatives professor who taught in '87, the date of the crash. If you don't have a definition of what the risks are, and you don't have data to measure it, then you cannot monitor and manage it. So risk management will fail. In a world of fintech, I do think there's likelihood and great promise of getting consistent, accurate, timely data. I'll give you an example. 1 million prices calculated by State Street to look at inflation, 1 million prices a day across the world is better than looking at one data point. Similarly, insurance data is needed for health, it's needed for food security, it's needed for homes, and all that data can be gathered better using AI as well as using big data to optimize and find out what should be the best pricing for that data. So Ping An does it, Samsung Life does it, etc. Something that I've been talking in China and Korea since the year 2000, that we need different kind of products for a 60-year-old than a 70-year-old and an 80-year-old. And for a woman relative to a man, for a farmer relative to somebody sitting in Singapore City. And I do see great promise in the use of AI, but we need to be conscious that it puts the consumer and people at the heart of it.
Sure, absolutely. So basically, you cannot print or paint, everyone with the same brush, because that's what a lot of insurance companies have done. Crafted, underwrote one product, and they have been selling it for everyone or every class of people. Dr. Jason, I have first soft and then a very important question for you, because you come with a very strong background for an insurance, and I want to ask this question to all the insurers. When you get into the flight, and a beautiful air hostess comes and tells that, oh, there is a life jacket. By any chance, do you just check it? Because you have a ability and analogy to always check the risks. Do you always do that? Have you ever seen check whether the life jacket is there below the chair or not?
Actually, it's a good question. I never realized that. I just assume that safety is always there.
Sure. So more important question now, Jason, is, like Amlan said, we cannot have a same product for the same category of people. There is a difference between the service design and the product design. Every company has been designing different product and serving it differently. So what is the model that the company should embrace by using data and AI so that the whole insurance will maybe scale up and reach to a next level?
Thanks for the question. First of all, thank you, everybody. Always great to be back in this stage. I think I just want to echo what Amlan just said. You have to be customer-centric, especially when it comes to pension, retirement, and insurance. You have to understand people's need, given that people can be in different life stages and they have a different risk preferences. And also, more importantly, if they buy some product, they have to first understand it. And then the performance, the risk, the dynamics, they have to be well informed. So all this requires your product and service model to be digital so that you can keep interactive with your customer. So that's why I think today's topic, it has to be data-driven, and we have to utilize the power of the latest large language model, which really enables you to be more interactive with your customer on a more real-time basis, and at the same time, make sure data privacy issue can be governed on the regulation and the practice level. So that's in a nutshell, I would say. Yeah.
Sure, quite meaningful. Let me move my focus to Dr. Sabine. Dr. Sabine, you have been doing a great work. In fact, have been very well known in the field of health. And my question to you is, while insurance companies are talking about health and medical and policies all over the world, my question to you is, do you think it is enough? Because the way the health issues are happening in the country, the way the health challenges are happening around the world and new diseases are coming, do you think that what kind of changes do you think that the insurance companies should do in terms of crafting the policies, looking at the health in a different dynamic altogether?
So, I believe both of you, as in Dr. Roy and Dr. Jason, both of you would know that, and you would have known it better than I, what is value-based insurance systems, right? When we are talking about insurance today, we are just talking about mitigating risk at that particular point of crisis event, be it risk of life, risk of disaster, risk of health crisis. But the beauty of this particular model, not just VBIS, but insurance as a model, is that they actually benefit from risk reduction activities as well. And that is where I think there is a huge gaping hole in the ecosystem at the moment. We are running a mad race and trying to acquire customers, but not reduce cost by actually mitigating risk through preventive activities. And again, I'm not going to talk about what is preventive care because that's another other discussion altogether. But I believe what is really necessary, and that is true for a global approach, not just for LMICs or not just low and medium income countries or for the global south, but across where we see non-communicable disease affecting not just health, but health, life, productivity outcomes throughout the value chain. And preventing crisis events in those areas gives us a net benefit in not just insurance, but also productivity as a whole. And that is where insurance plays a very beautiful part and needs to now start looking at in terms of activity.
No, sure, thanks for adding that. Now let me slightly shift my focus to pension, because this session is also about pension, which is one of the important things. Developed countries have a lot of interesting models for pension, but Asia needs to still pick up, specifically countries like India, but there is a different pickup, which I will just tell you. But by any chance, if you have any questions, please start shooting your questions. I will try my best to, take it. One small data point that I have is I was looking at Atal Pension Yojana, the scheme which Indian government launched very recently, which offers a pension scheme for, the Indians, got 66.2 million people how bought this pension scheme in last 1 year, out of which 52% are the women, which means that there is a greater demand for the pension side. But whether there are enough pension companies and the financial institutions are looking at the whole behavioral science and crafting product is what I would like to know from you, Amlan.
Thank you very much, Amol, for the question. I'd like to let the audience know one thing that most people don't pay attention to. Since 2004 in Brazil, I'm showing that the fastest growing population segment in the world is the 80 plus. They are growing at a rate 4% of the normal population, 4 times. And in Japan, they account for roughly 85 to 90% of the government's increased expenditures, point number one. Point number two is that the oldest countries in the world are not all homogeneous. In a presentation again to the Japanese and German governments, I showed in 2006 that they're all nearly equally old, but the Japanese consumer and worker is very different than the Swedish, the Greek, the Italian, and the German. And therefore, you cannot kind of have the same kind of pensions across those countries. And it is wrong to give pensions to people from richer generations, i.e. baby boomers like us. We need to divert some of the resources to the younger generations. I really do think that in the context of pensions, a lot of the world has moved away from defined benefit to defined contribution. But as Sabine has clearly said, if people start saving more, and here I must highlight, Pinbox Solutions, which I'm on the advisory board of, has managed to increase savings by getting people to understanding savings on the phone. In Rwanda, in India, in Bangladesh, and Kenya, we need a lot more of it. So education is key, but prevention also is key. And last of all, I'd like to put a plug for the company I work for. The health analytics team there advises companies like Novo Nordisk, GSK, Pfizer on pre-drug trials by looking at precisely what Dr. Sabine talked about. How can prevention help? And last of all, in insurance, using AI models, the firm that I work at shows that you can get better risk bearing and more affordable digital solutions which are understandable by people on the ground, be it a farmer, be it a machine worker, or be it somebody who is a CEO. So I do think this is all coming to bear nicely, but we need to understand the costs and understand the consumers who are very, very different in every province of China and every state of India. And digitalization, fintech can help us do that, not the traditional data methods.
Absolutely, always loved your points on the pension, Amlan. The world is getting younger. You can look at the longevity. United States president is perhaps the youngest one now. So we have to look at the pension far more seriously. And that's where, Jason, that I would like to add is, when I was growing up and when I got my first job, people were thinking that they will retire in 45, 40 years of old. Now they are already, those who are 40 senior to me, 40, 45.
Yeah, no more, my friend.
No more, my friends. But they have extended their, retirement age to maybe 55 to 60. And those who wanted to retire at 60 has increased to 65, 70. So while this is increasing, what kind of products do you think that the pension companies or the insurance companies offering pension should craft, and what kinds of products should be there so that there will be a big market and it will be catering to the large audience?
Yeah, this is an excellent question, Amol. I worked at AIG for 5 years. In that period, there was already a lot of talk about what kind of products would better suit. I think, first of all, in today's world, people want more flexible contribution scheme. So because income of many people, especially a younger generation, become more sort of a fluctuating. And we want young people to start planning in the early stage. So we need the product to be sort of more flexible in terms of the contribution plan. But that being said, when it comes to income, we want the income to be stable, right? And also, we want the income to be a little bit investment skill related, so that at least we can beat the inflation and we can beat the risk-free rate, so people can still have a little bit of sharing of the upside. That comes from the investment manager skill. So, but then I think there's several aspects that some bundling is very, very important. The first one is Sabine just mentioned. I think today the pension product should be more bundled with health. because basically that's a very number one foundational thing when it comes to retirement and pension plan. And also it has to be sort of a, tax advantage related, because that ultimately give you incentive to save. And the third one, I think that's what we just talked about. It has to be tech enabled for several very important reasons. One is we want this to reach more people. So people in a further remote area, the only way to reach them probably is through the phone. Then you need a very good digital remote technology to inform them and do the education and help the old people to have a more comfortable way to monitor their investment and help their advisor to help the old customer to respond, adjust their investment more promptly. All this, we have to rely on technologies. And if we talk about the scheme in the retirement world, we all know this rule of a 97-3, right? 90% of the people would choose to retire in their home, not really in some sort of fancy facilities.
Absolutely.
That's where you need technologies. Otherwise, impossible to serve this huge population. Yeah.
Absolutely. So, being a journalist, if I quickly pick up one headline for the benefit of all the customers is start early, start investing early for the pension. So one more question on the health, and I have started receiving questions from all of you. Thank you so much. I will take it. So one more question to you, Sabine, specifically on the health side. A lot of Asian countries specifically, don't know much about the developed countries, are offering huge incentives, on the health schemes, right? But insurance schemes are also there. Do you think this is enough given the population of many Asian countries? What kinds of changes do policymakers need to do perhaps to cater to the larger audience and not just BPL or mid-level, but the whole segment of the people in the countries?
First of all, thank you for the question, and I'm surprised that all of you are still engaged enough to start putting on questions, so thank you so much for that. I actually want to first touch points a little bit with what Dr. Roy and Dr. Jason said. So a couple of things is that we need to, in my understanding, we need to go back into the understanding and breakdown of what the risk actually is. And when you are, so what is the understanding of risk for an individual? We have looked at it from, consumer understanding and technology and interface levels, but the understanding of risk actually is very slim. We don't understand risk until we see the outcomes of a crisis effect, right? We see someone meeting an accident, we take a travel insurance or a accidental insurance. We see someone getting into surgeries and multiple health complications, we take a health insurance. Unfortunately, the understanding of health risk is marred by a personal belief, or rather more euphoric belief in personal well-being. And that penetrates across both financial and health sectors and has affected in that space that, you defer the risk to another day. So the understanding of what you were saying in Pinbox of helping people not just understand the risk, but the benefits of risk mitigation is extremely important. So I have the benefit of being a surgeon and I have interacted with this. So I think fear is a big factor that we undermine and we take it very negatively, but in healthcare, we use fear very effectively in getting people to do what is right. So I believe that the messaging of health risk or other risk understanding across the value chain is extremely important. And touching base on what you said about digital interfaces, I think one of the things that we really need to also do is add a human component to it, at least for the next generation, because if you look at the mental health and outcomes of technology adoption and understanding of technology adoption for the younger population in the region, it is shifting drastically every day. So a human interface to look at the risk components as an add-on to the technology level is very important. So for example, some of the models that I've worked in creating BBIS have been the ones in which we have people going home to home actually delivering tech solutions. Right? So you have someone you can interact with, someone you can talk to, and that level of understanding of solutions and risk associated with it is extremely important. And coming back to what you said about the region, I think we have depended for a while on policymakers to look at, BPL populations and others, and they have done, a good job in understanding at least and trying to design solutions. I think we need to define financial models now which are actually private sector based that work better in the region, which is where insurance and pension both as risk instruments come into place.
That was a very valid point. I have lots of questions, but I will take a pause with my questions and start shooting your questions. Thank you so much. And like Dr. Sabine said, that thank you for the engagement. So this question is about GenAI, and I would like all the speakers to respond quickly, one by one. I will ask these questions. So this question is specifically about GenAI. Will GenAI and other technologies help expedite data-based insurance and personalized services? Amlan, do you want to take that?
Absolutely. However, I do think, and I cannot underscore enough what Sabine said, we need human interaction. We need to understand human psychology. I am from a school where we taught currencies at sub 1 minute frequency in 1995, how to optimize. But that assumes that he's supercomputer 1, she's supercomputer 2. We need to understand fear, psychology, and the experimental evidence, which I think Gen AI as well as good data will help us understand better and develop better solutions, as Dr. Jason and Dr. Sabine talked about.
Sure. So another question, Dr. Jason, I want you to take is, we partly discussed this, but I think with the rise of active older persons who wish to engage in the gig or an informal economy, what are the key considerations that insurers and the public sector should have?
Well, I think, again, if you talk about the whole business process of insurers, from pricing the risk to product designing, to reaching the customer, to underwriting the product, to managing the claim, every aspect, every step can benefit hugely from technology, digital methodologies. So I think for insurers, the very important thing is they have to invest in digital infrastructure. And then based on that, as Amlan mentioned, do very hard to understand the specific need and the segmentations of the customer base so that to design more targeted product and services. At the same time, protect the data privacy. So I think those are the three very important dimensions that insurers would benefit hugely from this wave of technologies. And for the policy, I think they have to encourage more transparency and to encourage more investment in digital infrastructure in the private sector. But very importantly, to come up with digital ways to help customers better understand and evaluate the different products. I think that's like a huge problem right now. As you mentioned, this insurance products are complicated, not easy to understand. So I think one big job the government should do is really to provide effective ways, help customers to better understand, assess, compare, and make a decision on the product and the services.
Okay,
Yeah.
sure. Dr. Sabine, there is this question about preventive care. Who is responsible for preventive care and how do we make it inclusive? As we saw in COVID, it can originate anywhere, close to the world.
So we first need to understand what are we preventing, because we talk about preventive care quite a bit. We are not preventing disease. We can't prevent disease. There are genetic markers to it. There are lots of other variable, components to it that we can't really prevent disease per se from occurring. But there is a segment called silent diseases, which medically we call non-communicable diseases, NCDs. Now, they affect morbidity. And what are those? Those are your diabetes, your hypertension, your cardiovascular issues, your kidney issues, all of those, right? Now, the point is that what we are preventing here is crisis events. We are preventing, and I'm sorry I'm giving that example, but someone's mother getting diagnosed with a grade 4 stomach cancer and having a couple of months to live. That not just shifts your entire perspective towards life and finance, but also productivity of not just a person, but an entire family, and pushes back an entire ecosystem from there. So when we are talking about prevention, that is what we are trying to prevent. That is one, not just infectious diseases, but morbidity, right? Morbidity means the risk that is going to occur and the outcomes that are going to occur in a very risky fashion because of infectious or non-communicable diseases. Now, who has the mandate for it? We can say that the governments do have a benefit in having a healthier population. Companies buy insurance because they want a healthier workforce. But ideally, insurance is a very interesting financial instrument that benefits from people staying healthy. So value-based insurance systems is not a new idea. It's been around since 1980s. But investing in keeping your cohort population healthier instead of denying outcomes when they actually occur is something that is going to benefit insurance sectors in a big way, and which is why they also are a massive stakeholder, a growing stakeholder, and perhaps a private sector alternative to just depending upon policymakers for preventive outcomes.
Sure. The time is up. Wish I could have taken more questions, but as we all know, Singapore is quite punctual. The volunteers are already standing there, and we have to wrap up here. But thank you so much for being part of this session. This was the last session of the day, but still, I could see the engagement from you. And I want you to do two things. One, clap for us. That is one. And second, more importantly, please, please clap for the volunteers. I really like them. The way they have been managing all this, the kind of instructions they have been giving us is remarkable. Thank you so much. Thank you so much.
Thank you. I was just going to say 9%